Aloha, YouTube investors. How is everybody doing today? My name is David Yansen. Welcome to my channel. Today is April 22nd. It is Thursday, 2021. And we're going to be talking about, or I'm going to be talking about, Verizon and AT&T. AT&T versus Verizon, the two telecommunication giants here in the United States. But first, I did want to share with you some exciting news for the second day in a row, or actually, I don't remember when the last video was that I showed this in. I did just do a video on IBM and Intel that just uploaded like 5 minutes ago. But I think the only other video that I did was buying the dips, Pepsi for passive income, JP Morgan Chase. I'm not sure if I showed it in those three videos, but I will put a card up here around the 1 minute mark for you to click on where you can see the improvement in my investment journey here. For the first time, this is a record. I am now over, and this is trackyourdividends.com, the website that I use to have all my holdings in. I'm now over $24,000 for the first time. That is a record for me, which personally was really exciting because I didn't really think that I would get anywhere close to this in the first not even 2 years. I started investing in like the end of April, beginning of May of 2019, and I thought maybe I'll get to 20,000 in like 5 or 6 years. But because like I mentioned in all my videos, I just don't have a lot of money. So, and then another record here for me is my total gains is now over $3,700. And that happened because for some reason, I don't know why, but back when NextEra Energy, the utility company, did their stock split, I forgot to update this website, trackyourdividends.com. I own NextEra Energy, and let me put the ticker symbol in here so you can see. In my Roth IRA, they're a Dividend Aristocrat, and that portfolio is mainly for Dividend Aristocrats and Dividend Kings, with the exception of my real estate investment trust and my two Apple and Microsoft, which we'll get there, in time. But I forgot to update this when they did the stock split, so actually I have 7 shares, not the, I think it was 2 shares or something like that, 1.5 shares or something like that I had way back then. So once I updated that, my average cost price dropped down from $200 and something to $62, and the stock price is actually now $78 for one stock, to buy 1 share in this company. So my profit went up to $112, not including the dividends. That is one thing about this website, trackyourdividends.com. It doesn't account for the dividends on each of your holdings when it tells you your profit loss or your profit/loss. But anyway, wanted to share that with you guys. But let's go ahead. I will actually do a video at the end of this month on trackyourdividends.com on this website. I will, and we'll kind of go through what companies I bought, what companies I sold, if there are any. Otherwise, I'll just kind of give you an updated review of this website, trackyourdividends.com. A lot of good free stuff with this website, so check it out if you haven't. But before we get into AT&T and Verizon, I would like to ask you to subscribe to my channel if you haven't already. Also, like the video. There is a thumbs up button down there for you to like the video, and please feel free to share with your family and friends. And I do want to say mahalo, thank you to everybody who has already subscribed to my channel, has continued to follow my channel, and likes my videos. Thank you very much. It does help the channel grow, and as you can see, I am a small-time investor with a small-time YouTube channel, so any little bit helps whatsoever. And then mahalo, thank you to those of you who have used my referral links in the past to start your investment journey or just to get the free stocks. Whichever it was, I appreciate it. There are links in the description if you do want to get 2 free stocks of Webull, or free stock with Robinhood for signing up, a free stock with Doe Finance for signing up. There's 3 or 4, maybe 5 links there for you to check out. But I do own AT&T and Verizon in my Fidelity account. I have 3 main brokerages that I use. M1 Finance, Fidelity, and Robinhood. Robinhood is my growth portfolio. And right now, with this Fidelity account, I'm a little over $9,300 with it. And we're going to talk about Verizon first. So let's scroll down here and see how many shares of Verizon I actually have, what my average share price is, and what the stock is trading at right now. So zoom in just a little bit here, and you can see that I have just over 9 shares of Verizon. The ticker symbol, by the way, is VZ. 9.188 shares is what I have. Like I've mentioned in almost all of my videos, I don't have a lot of money, so I'm not one of these people with hundreds of thousands of dollars invested in the stock market. One, because I just started, and two, because I don't have a lot of money, and probably 90% of my my holdings that I've bought with fractional shares. Verizon, the same way here. So 9.188 is the number that I have. My average share price is $55.12, and because the stock price is now up to $57.28, my total return is almost 4%, and my total gains is almost $20 at $19.83. So, and this portfolio overall for me is actually doing really, really well. Record number with that as well too. If we, let me close this out really quick here. You can see this column is total today's gains and losses, which you can see a lot of red there, with the exception of AT&T, which jumped up today. And then this column, you can see total gains and losses. Everybody's total for me is in the green, and so my total gains is up over 16%, over $1,200. And gains is what I have with this brokerage account. And then my Robinhood is up and my M1 Finance is up as well too. So, but let's look at Verizon as the stock price. Like I mentioned, at over $57 for the year, it is up 2.32%. Year to date, it is actually down a little over 1%, but Verizon, like I mentioned in another video, is not a company that you invest in for huge growth. It's not sexy, it's not fancy, it's not exciting, it's not Snapchat or Twitter or Tesla or Bitcoin or Shopify, any of these companies, Google, the FANG stocks that are constantly, just the numbers in the 200s, 300s per share, 3,000 per share for Amazon. That's not Verizon. Verizon, you kind of get into knowing that and knowing that you're going to get a good dividend. So let's look at the dividend. And this is why I like Verizon personally. They are kind of boring. They're kind of slow. They're blue chip. You get a really good 4.38% dividend yield, which is way above what the S&P 500 ETF gives you. Your annual payout's going to be over $2.50. They have a really good, according to Seeking Alpha here, a really good payout ratio under 50%, which is amazing. The dividend growth over a number of years is actually more than 8 years, I believe. I think it's actually closer to 15 or 12 or 15 years or something like that. Every now and then Seeking Alpha just kind of craps out, I guess, and doesn't really, I guess it's an algorithm that they use or something like that. But going back to their dividend, for every share that you own, you will get 63 cents for every single quarter. So for the 9 shares that I have, I will get 63 cents. That will be paid to me on May 3rd of this year, 2021. And then I will get for the 0.188, the fractional shares that I own of Verizon, I will get a fraction of this 63 cents, which I can't do that math in my head, but I'm going to say it's like 5 cents. So, but it all adds up. It all adds up very, very quickly here. And if you saw any of my videos from my Roth IRA on or even my dividend tracker videos, you can see how fast it adds up really, really quickly. So let's go ahead here and look at Alpha Street. This is the website that I use for a lot of these videos when they provide these graphs. They call them infographics. So this is Q1 2021 for Verizon. Earnings were reported yesterday on Wednesday, April 21st. And I found I don't pay a whole lot of attention to the news on Verizon because, like I said, they're just a solid company that's going to keep paying you those dividends quarter after quarter. They are still the largest telecommunications cell phone provider in the United States. Cell phone service, they've pretty much blanketed the whole country with the exception of some mountaintops, I'm assuming. But they are aggressively going into what they are calling network as a service strategy and the expansion of their 5G. And I'm not entirely sure, but I do know that President Biden in his infrastructure plan wants to extend broadband cable internet service out to the rural areas of the United States. Well, Verizon already has cell phone service out there, so I wouldn't be surprised. I don't know if this is true or not, but I wouldn't be surprised if Verizon is one of those companies that gets to take advantage of some of that money that he wants to do with his infrastructure plan to provide service out there, seeing as how they already have cell phone towers out there. So they've already spent in an auction for C-band spectrum, the company acquired in $53 billion government auction. $53 billion, sorry. So they're spending a ton of money on this expansion, and they have the cash flow basically for it because similar to AT&T, their wireless industry, their cell phone industry is a cash cow for them. It's the golden touch, if you will, for Verizon. And just looking at the numbers here, you can see that over $32 billion, almost $33 billion, it's a B billion, in operating revenue this last year over year. It's up 4%. You can see their net income over $5 billion. They beat on their earnings per share in this last quarter. They beat on the revenue side as well too. And then when we look at the segment highlights here, you can see the consumer side for revenue grew to almost $23 billion. And the business side grew a little bit, up 1% to almost $8 billion, $7.8 billion. So growth pretty much all along the way for Verizon. I'm sure they were helped a little bit with the stay-at-home economy. People probably needing an extra tablet and hook it up to the cell phone service, or maybe speed up their internet at their house or something like that when you have more people connected on a regular basis. But regardless, being the largest cell phone provider probably helps with the Fios internet side as well too. Now on the downside, you can see their retail connections and their wireless retail postpaid connections all grew as well too. On the downside, their total postpaid net additions for this last quarter was in the negative. And you can see it was in the negative for quarter one of 2020. So I don't know if that's just a typical thing for them. It wasn't in the negative for 2019. It didn't jump a whole lot, but it, still not good numbers when you see negatives. But I'm sure that they're fine. They are turning out so much money in free cash flow. I believe I read that they were $11 billion or something like that in free cash flow of money that they have to either do share buybacks or pay their dividends, other things like that. So the company is on stable footing. And so like I said, instead of putting your money in a bond, in my personal opinion, and I'm not a financial advisor, this isn't investment information, none of my videos are investment information because I'm not an economist or an accountant or anything like that, but just my personal opinion, instead of putting your money in a bond, buy some shares of Verizon because the dividend's going to grow. Bonds don't grow. Their dividend payments don't grow. The dividend's going to grow for you for Verizon. You'll get a little bit of capital gains with it. Nothing spectacular to brag about to anybody, but you're going to get those for sure payments every single year. Their debt is super, super high, but I don't think that they would have any problem. It's probably stretched out over 10 years or something like that. I don't think that they would have any problems paying their debt, even those that are due in the short term. So just my opinion. Check it out. Now let's go over to AT&T really quickly here. I do try to keep at first I tried to keep my videos under 10 minutes. Now I'm trying to keep them under 15 minutes. The last one that I did, Intel and IBM, hit 20 minutes, so I hope somebody watches that one. It's a lot of good information in there, just like there's a lot of good information in this one, but I know people have other things that they would like to do. So really quickly here, let's go over to AT&T, and I personally own 14 shares of AT&T. With the exception of Pfizer in my Robinhood portfolio, this is the most shares of a company that I actually own is with AT&T, and that's because they were super, super cheap. In my opinion, it was a really good value pickup in AT&T when they were trading under $30, and I was able to get my 14 shares, average share price $29.62. Now the stock jumped up today, up over 4%, and it is at $31.36. So my total return is almost 6% at 5.87%, and my total gains is $24. So I will add more to AT&T if it drops down below this $29.62 mark. Otherwise, I'll just sit here with my 14 shares. I wouldn't be surprised if it dropped again, but AT&T has done some. They've got a lot of debt. They've got, slow growth with their landlines, just like Verizon does. They have slow growth with their satellite dish network and stuff like that. So they've been trying to get rid of some of that. I think they did sell off portions recently here, and so that helped the stock kind of start to go up. And then with the information coming out about their earnings report, people felt even more positive about AT&T to buy more shares of them. So just to take a look at here on Seeking Alpha, you can see for the year, not even up 1%, and that's because the stock just basically stayed below 20 29, below 30 for sure, but below $29 for a really, really long time. Not exactly 29, but 29.53 somewhere around there for a really, really long time. Year to date, they're up almost 5% at 4.69%. And the reason, in my opinion, that you get into AT&T is for this really, really good dividend that they provide. Really, really nice, almost 7% dividend for a company that, in my opinion, is in a value area, not a value trap, but a really good value pickup because they are getting out of this debt. The CEO aggressively wants to get out of this debt. He's always looking to get rid of these parts of the company that he thinks that will help decrease their debt for them. The wireless business is still huge. They might not be number 2 in the cell phone area anymore. They might be below T-Mobile or tied or something like that now. T-Mobile's huge growth right now, in growth mode, so T-Mobile doesn't even pay a dividend. So if you want, in my opinion, if you want to pick up shares of AT&T, it's still really good. It's still really cheap at $31. It's probably going to hit $43 or $50 in the next couple years here, so that will give you good returns, and you'll still be getting a nice dividend. Whether it's still this 6.63%, it might only be 4%. That's still better than 1% or no percent. So the annual payout's not huge. It is over $2. So for every share that you own, every quarter is when they pay their dividend. You're getting 52 cents. So for my 14 shares, I get 52 cents every single quarter. The next payout date is May 3rd of 2021. So I will get 14 times 52. I think I have a little bit of fractional shares. It might only be a couple cents, somewhere around there though. And this definitely is wrong when Seeking Alpha talks about AT&T's dividend growth. They are actually almost dividend king status, which means that they have been increasing their payment in dividends to their shareholders for 50 years or more. I believe they're at 46 years or 47 years. I did read that they haven't increased it yet for this year, so that will fall, they'll fall out of dividend aristocrat status if that happens. But personally, I will still hold them regardless if that happens, just because of the nice dividend yield, even if it gets cut or slashed a little bit. And they do have the potential to hit that $40, $50 mark with the stock as well. But if it drops down below 30 again, the price that I have, like $29.50 or whatever, $29.50, then I will add a couple more shares if I have the money to do so. But let's go ahead and look at Alpha Street here with these numbers really quick here in the infograph. You can see they had a really, really good quarter. This was reported earlier today. Here in Hawaii, it's almost 8:30 p.m. So this was reported at I think noon Hawaii Standard Time. Actually, it was before that. But regardless, here are the numbers. Almost $44 billion, up 3% revenue year over year, and the same thing with their net earnings, and they did beat their earnings per share estimates as well too. Look how big they beat this GAAP net earnings number, $7.5 billion, up 63%. That's amazing. Communications area grew 5%. Warner Media grew 10%, and I think AT&T knows that they are solid with their cell phone service, so they're really looking for HBO Max to take off. And so they've started releasing movies in movie theaters and onto HBO Max. And I personally thought to myself, there are some movies that they have, like the Godzilla versus King Kong movie. I don't know that I want to pay $15 and then whatever it costs for popcorn and a soda at the movie theater to watch. But if they give me a free trial period, I'll watch Godzilla and King Kong on my TV here at home and make nachos myself, which might cost me $5 or whatever to get all the ingredients together. So I think they might be leaning more that direction of like the Disney Plus, of not really releasing things in the theaters anymore, but going straight to in-home streaming with HBO Max, their website, their app. So they're kind of looking for that to grow big. A lot of their movies right now I think are going to be released on both. But like I said, I wouldn't be surprised if eventually it goes straight to television, skipping the movie theaters. Latin America is down here. I wouldn't be surprised if they're looking to get out of some of these, sell off some of these spots, Mexico or Vero, these wireless areas here. Warner Media, you can see the numbers here, and then the business wireline, the mobility, where things sit with those numbers. And then total subscribers did grow, different to Verizon like we just looked at. Total subscribers and connections actually jumped up for them from not just quarter one of 2020, but quarter four of 2020 to quarter one of 2021. it jumped up to 186 where it was 182. I'm just kind of breezing through these numbers really quick here, so the video is not so long. And then you can see things grew for HBO Max as well too. And like I mentioned in my Netflix video, that was one of the reasons why I wasn't really going to invest in Netflix unless it was under $500 per share, is because Disney Plus and HBO Max are coming for them, and their numbers are looking really, really good. Now, are all of these subscribers paid subscribers for a long, long time? I don't know. I mean, HBO does have some really good programming with Game of Thrones and stuff like that. And then we can scroll down here and you can see their cash flow is almost $10 billion. Operating cash flow, operating income up 3%, over $7.7 billion. I think we talked about that just a second ago here. And operating expenses dropped 3%, which is really nice. So my personal opinion, if you only had to choose one, AT&T or Verizon, because you're like me, you don't have a lot of money to spend or something like that, personally, I would go for AT&T for the growth side of it if you were looking for growth. But if you want that regular solid dividend payment and aren't too concerned about capital gains because you are more of a dividend investor like I am, then go for Verizon. Take Verizon. Pick up some shares of Verizon. I think you won't be disappointed in the long run. But I still think that AT&T stock price could jump into the 40s and the 50s in the next couple years, so you can get those capital gains. And if you end up getting a 3% or 4% dividend on top of it, that's really nice too. But there's still more to be seen from AT&T. Are they going to be able to get this debt down significantly? How are they going to do so? What's going to happen with HBO Max? Is it going to continue to grow? So there's still some question marks with AT&T, where with Verizon, they are solid. They are locomotive, full steam ahead. They know exactly what direction they're headed, and they're not too concerned about their debt because they know that they're building something for the future. So next videos coming up, I can't think of off the top of my head, but continue to check the channel. Subscribe, please, if you haven't already. Mahalo and aloha, everybody.